Thank you for joining us today for this session, Preparing Microfinance for Tomorrow, Policies, Risks, Opportunities in a Security-Focused Era. So in an age where security concerns, of course, are shaping global economies, we need to understand how microfinance can evolve through strategic policy making, mitigate emerging risks, and unlock new opportunities, hopefully, to foster financial inclusion and stability. So this will be the topic of today's conversation. My name is Martina Grigorova, and I'm CEO of Swiss Credit Bulgaria, leading social finance provider, and also council member of Microfinance Center. And I will moderate the session today. So about the session, just to frame it, so the audience to be aware what is coming, we have 60 minutes. We have prepared 2 polls with questions, and questions are welcomed in the chat during all the session. So please feel free to type your question, and after each intervention by speaker, I could address them. So we are not going to wait until the end, but hopefully you have questions or comments during also the interventions of the speakers. And now to measure the temperature and in the room and see what is like the mood. Dorota, could we start with the first poll for the audience? And while you are voting for, let's say, 1 minute, about how optimistic are you about the future of microfinance in the next 5 to 10 years? So are you very optimistic and enthusiastic, rather neutral, or you are pessimistic? So please vote. And while you are voting, I would like to present the speakers today. So we have Cristina Dumitrescu. She's head of Inclusive Finance Unit at European Investment Fund. No need for further clarification. Who is Cristina? You all know her very well. We have also with us Severin Strohal, who joined the European Commission DG Employment in summer 2025. So he could be a new face to most of you. So he is Deputy Head of Unit for Inclusive and Social Entrepreneurship, which you know promotes the social economy and social and inclusive entrepreneurship. And we have also Gregor Galusek, who is an expert with more than 30 years of experience in microfinance, former MFC Executive Director, and currently Senior Microfinance Center Advisor. So welcome to our dear speakers, and let's see what we have from the results. Okay. Moderately optimistic, steady progress expected, which is nice. Okay. So for me as well, like not to be very optimistic, but I'm also moderately optimistic. I think that there are many opportunities ahead of the sector. And now let's discuss them. So let's start with the first round of questions. Grzegorz, to you. So you are, as I said, an expert with impressive experience in microfinance. So you saw the MFIs from babies, and now they are adults, maybe. So where we are now, could you give us a brief overview, like how has the microfinance sector evolved, and what are the main lessons learned?
Very good. Thank you, Martina. Thank you for introducing me and giving me an opportunity to speak today. I will not dwell on the history of microfinance because that would take us a lot of time. Just we'll focus on a few lessons learned regarding both the global development and also maybe a couple of developments and lessons that are related more to the EU or more developed context, basically. So I think one of the first lessons that we have learned, and that might be actually a little bit depending how you view it, but some people might view it as a negative thing. Some others would say it was a reality check, more of a reality check. But I think we learned that microfinance is not a panacea for poverty alleviation. I think that's a powerful lesson, and it took us some time to realize that. A lot of narratives, even currently, actually focus on this poverty alleviation aspect. This has not been verified by rigorous scientific research. So I think that's one of the first lessons learned. But what's important, we learned that it's microfinance is a very important utility, kind of a type of utility that access to education or health services is. So even if it doesn't have this powerful impact aspect, it's still is an important service that people who are less fortunate, who are poor, who do not have access to, do not have sufficient social capital, they they should have it. We have an obligation to provide it, and microfinance eventually, which as a multiple service which developed from microcredit, came to a better understanding of itself as a suite of services. So not just credit, but also potentially savings, payment services, and other services that people, that middle class people or rich people, they have for granted. They kind of function in the background for their lives, but poor people don't have access to such services. So that was one thing. This the kind of expansion from microcredit to microfinance also led to certain commercialization of microfinance, which when it was brought to its extreme in some countries, it also had some negative consequences. Nonetheless, the focus on financial sustainability actually allowed to build a range of institution, not only a range of institutions, but actually a whole globally. It's an industry. It's a very rare that an NGO, something that starts as an NGO effort, actually leads to building a global industry. So it was vital for this industry to become financially sustainable. So not just operationally, not the ability to cover operational costs, but financial sustainability has become an important factor while maintaining the double bottom line. So although we had this extreme commercialization on one hand, there was a lot of reflection. At that time, microfinance was already an industry, and actually we self-imposed various checks and balances to counterbalance those negative consequences. So customer protection principles, so double bottom line concept, and how to operationalize it within each institution. So lots of development initiatives that allowed to the microfinance institutions to pursue their activities. And at the same time, we also built an incredible ecosystem. So specialized investment vehicles, institutions that finance MFIs, a range of consultants, technological companies that created products that would help those MFIs to be more effective and more efficient. So coming to this region and to the EU, basically, it all started actually in this new wave of microfinance in Europe. Microfinance has a much longer tradition, mainly through the cooperative movement that was quite robust even in the 19th century. But this new wave came in the 90s, first in Eastern Europe. So you can all imagine a situation where the old state system, financial systems were collapsing, and there was a real vacuum in the market. There were lots of new enterprises, some of them tiny, some of them a little bit bigger with growth ambitions, but no financing. So actually, this first wave of MFIs was quite fortunate to have rather vast market, and many of them managed to establish themselves as important players, market players, and sustainable to boot. So some of them still function, some of them became banks, some of them work in partnerships with banks. There is a big variety of institutions. But then, just once the region of Eastern Europe developed more, and many of the countries of the region became members of the EU, a lot of where the financial system is developed, there was an effort also to create microfinance in the EU. And I think here we have this kind of interesting and a little bit paradoxical development where there was there are institutions that have a very strong social focus, but are rather weak on the financial sustainability side, and that has its obvious reasons. In the West, the financial system is well developed. There was no such a big market gap that existed in Eastern Europe, and the Western MFIs from the beginning had a very strong social inclusion mandate. So they were, and they still are, in a rather different position where from the mainstream market. And then, just what we were hoping to achieve over the time, we were thinking, okay, so we have those European MFIs, financially sustainable, pursuing growth strategies in their markets. Then we have, those EU kind of as a sort of antithesis, more kind of NGO-ish, pursuing social goals. And then we're hoping for some sort of Hegelian synthesis where, just the Western MFIs will learn how to be operationally financially sustainable, while in Eastern Europe we would learn more how to be a little bit more social. But nothing of that, I think, happened. And what we see is more the convergence towards the Western model, of having of becoming kind of a social enterprise rather than financial sector players. So I think that's something important that has happened, and we are in this kind of a strange situation where even of a certain disorientation, especially for MFIs in Eastern Europe, which way to go, whether to follow the financial sector.
Yeah. The truth is that we need to have the Western, let's say, social mission, etc. But this is achieved mainly through also support from the municipalities, from the government,
Sure.
etc., etc. So really, it's important to keep both like financial sustainability and also social mission. And maybe this is where we should go. We could not sacrifice the one in favor of the other, right? So
absolutely, yeah. No, I fully agree with you. We should find this balance, and it's a kind of a social enterprise type of a balance. So
yeah.
So it's not mission
Okay.
impossible, and we'll in the course of this session we'll probably discuss how
Yes.
we can do that, how we can get out of this bit of an impasse that we have right now.
Thank you, Grzegorz. Thank you
Okay.
very much. And I'm using this opportunity that you said that we need to be like we became more commercialized, but maybe we need to be like this in order to be sustainable.
Sure.
And this is coming from the main reason that actually we are hearing a lot that we are victims of our success because the sector has grown so much that at the end we need more money and more money and more money. And talking about money, Christina, you are the money person. So I'm heading to you. The funding needs of the sector have dramatically increased. You could see this from your practice. So now when the EU priorities has shifted towards defense, etc., how do you see the sector in the next, let's say, 5 years? What is your vision? How we could ensure funding and how the sector could adapt to this reality?
Thank you very much, Martina. Good morning to everybody, and many thanks to the MFC for inviting me to join the 2025 Social Finance Vibe online conference. You said that I'm the money person. Well, actually, there are two money persons in this because EAF works only based on mandates and funding received from the European Commission. But I will not spoil Severin's intervention. What we are seeing in the market is indeed the EU priorities have been somehow shifted, and in a way, it's logic that this shift happened, given the current geopolitical context that came somehow on top of the pressures existing already from the environmental and climate changes issues, topics. The problem is, in my opinion, that these challenges are impacting more on vulnerable people, are causing more people going into a vulnerable situation, which in my mind makes microfinance or social finance in general as being more important than ever in tackling these challenges. Now, what the sector needs to do to ensure it remains on the radar of the EU policies, well, the audience probably heard me saying this over the year in other contexts or in other events. The sector needs to show off. It needs to publicize, to market their results, their hard work and their impact on the ground. We all know that social finance in general plays an instrumental role for the financial and social inclusion through entrepreneurship. We all know how these support the development of local and regional communities with direct impact on local or regional economic development and job creation and so on. In my view, it is time for a larger public, larger audience, for all policymakers to become aware and understand the social economy's role in addressing these basic needs and these economic vulnerabilities.
Yes. Yes, thank you. Showing off, right? To show off, to demonstrate. This is something that we are hearing from early in the morning today, that really we need to show our impact. Yeah. And talking about, you said that we need to tackle new challenges, that the new reality will more impact actually the vulnerable people, like these climate changes, etc. And this is where the role of microfinance is. And I absolutely agree with you. Severin, to you, like, could you give us shed some light on what is the European Commission vision for the role of microfinance. So we heard today from Mr. Nava that we are powerful in supporting women, migrants, unbankable people, people at risk of poverty. So this is our strong side, let's say it like this. But talking about policies at DG Employment, and especially at your unit that is dealing with inclusive entrepreneurship and promotes the social economy. So how this development of the microfinance sector to be supported by the European Commission during the next 5 years? Where do you see our role and how we could fit your priorities?
Well, thanks, Martina. Thanks a lot for the question, and good morning to everybody. I'm very happy, very honored to be here and to be invited and to have the chance to address you on this. I think you have heard with Mario already a passionate supporter of microfinance at the most senior level, I think, of the European Commission. And I think it shows very much that we care a lot about microfinance and what I would put it to answer your question straight away. I think it's as a vector basically for social and economic inclusion. Now, I think he clearly made the point that we have had a very rapidly evolving geopolitical and geoeconomic situation over the past couple of years, to which Europe, I think, responded by very much putting the questions of competitiveness and but also of resilience at the heart of its agenda for the next couple of years. That said, I think that doesn't mean that the social dimension of Europe has lost in terms of relevance or importance for I think two very much obvious reasons, which is that in the era of competitiveness, ultimately what distinguishes Europe's market economy from others is clearly the social dimension that accompanies this market economy. And then on the matter of resilience, which is that, of course, there again, your social safety nets play a crucial role in keeping the continent resilient in face of extremely heavy external shocks and pressures that we have faced over the past couple of years. So what does that mean for more strictly for our policies is that I think they very much remain on the agenda. I think we're going to keep the European Pillar of Social Rights as sort of the compass of priorities that will be sort of how do you put it, developed in over the next couple of years, continue to see its development and advancement, including in the context of the next MFF. And I think that that's very much important to know that when it comes to our financial support to the EU's policy objectives, we've moved now to a system where we've tried to really merge a number of different funds to give them a simpler orientation to make them also more results-oriented and performance-based. That said, I think we very much see now still or even more so the opportunity to advance through the national, regional partnership plans, the social objectives that are anchored in the European Pillar of Social Rights through what we call now the European semester, which will basically provide reform recommendations to member states. So in these recommendations, the social policies will obviously feature prominently. And I think coming really to your question here, I think it's where microfinance can play, again, an important role as a vector for promoting some of these objectives at the national, regional, and local level. So, I mean, I think some of these have been discussed this morning, but obviously, when it comes to the preventing people from falling into poverty or helping them out of a situation of poverty, we will also now look in our upcoming anti-poverty strategy that will come out next year, how the microfinance can again or does already contribute actively to this and to give this a particular value. Secondly, I think we have, of course, the core of our mandate is the access to the labor market. I think here again the question of how the sector accompanies the integration of needs in sort of integrating the labor market is key. So is the question of obviously again, like you said already, the accompanying broader vulnerable populations. But beyond this, I think, and that's what Gregos and Christina already said, I think the number of broader policy areas, from the green transition to energy transition to student mobility, etc., where microfinance is again an actor that also beyond DG employment support should become visible to other, or should be visible to other directorate generals and to other, and feature in that sense also in the toolbox of the EU's support to broader set of policy objectives that but coming back to ours, I think what and to maybe also the point that was made by Gregos, I think and Christina about the question of visibility, how for us why we think microfinance is important is because ultimately it is an extremely efficient, budget efficient tool in terms of delivering results. So, and that's maybe something I'll come back to later, but I think if there is ADI in France who's publishing regularly, I think it's estimates of how much social value it delivers. And I think the most recent one has shown that for one invested euro, it delivers €5 of added value from a social point of view, and be that through public cost savings, tax contributions, stimulating the local economic development and activity. So I think that's of course, in times of shrinking budgets, a huge argument to make for the sector. I think that's also why we believe, that's why we are really very much believers that it being one of the very relevant instruments amongst, fair enough, others, because not everybody's born to be an entrepreneur, but obviously one of the key instruments to help us tackle our priorities over the next couple of years, be that on poverty or on work integration and labor market access.
Thank you very much. Yes, I like this, that microfinance is a budget efficient tool for results. Yes, we are like cheap and we are making great impact. But yes, the main question is that there are so many new policies, and you said there is need for alignment between DGs in order to be sure that microfinance will remain like as a policy tool, because you said also that there is new national and regional partnership plan that will drive this implementation, and Mr. Nava said this. So which means that we are more or less dependent on what member states are going to implement and what are their priorities. And in order to fit all what you said, like green transition, student mobility, anti-poverty strategy, and also access to the labor market, we need to be fit and show our what we have, like our impact, as Christina said, showing off and so on. So I could see that this is key here in order to fit these EU objectives and be sure that we are going to be included in the policies as a tiny but very efficient tool. Yeah. Yes, good. So I don't think that we have questions for the moment in the chat. So I propose to go to the second poll that we have for the audience, just to wake the audience a little bit and shake it, and to move to the other topic that is going to be about challenges, about risks, but also opportunities. So, dear audience, please vote here. The question is, what do you see as the main challenges for microfinance development in the next 5 to 10 years? And please select two options to see where do we see our sector now, and we are going to tackle also with the speakers the same issues, and we are going to comment the results from the poll. Okay, funding constraints. The money people, again, to you. Okay, good. Okay, for the moment, we have like, I will leave like 5 or 10 seconds more in order everybody to be able to vote. And Grzegorz, could you start with your comment? Like, where do you see the major risks, challenges for the sector? And please give us some opportunities.
Sure. So
I'm closing the poll in like 10 seconds, so I will interrupt you at one point.
yeah. Sure. So my view on this, on the problems and opportunities, is a little bit specific and a little bit non-orthodox, I would say, because I see it as a kind of, I'm not even how to call it, some sort of at the moment, some sort of a kind of even double or triple squeeze that MFIs have. One is the kind of identity problem where, just the East European MFIs were, to use the psychoanalytical term, were sort of castrated to the role of being more NGOs, because there's a lot of subsidy. You cannot offer very high interest rates. Just there's a reputation risk, that there's a certain expectation in the market. But they have this sort of a they live with this identity that just we are just financial sector type of a provider, while something opposite is on the more or less on the Western side, where you have MFIs that have just they have been with the social mission, NGO mission, and they see it as their vital role, and they have difficulty, just submitting to this, just commercial logic of being sustainable institution, more or less. I'm not saying that.
So sustainability, it's
Yeah,
key
exactly.
here.
I'm not saying that this is, just 100% picture, but that's more or less kind of let's call it a trend.
Yes. Could you comment on the results? Could you see them?
Good. Mm-hmm.
So could you see them? Like
Funding
constraints, of course, limited access to capital and investment. This is key. But also we have two more that are on the second place. And the one is geopolitical instability, conflict, sanctions, global uncertainty. This is natural, but also fintech and digitalization risk. MFIs forced to change and abandon their human touch model, and cybersecurity concerns, which is also something interesting maybe to comment.
Yeah. No, absolutely. And so this actually ties into, so as I said, I'm trying to close this. I think each of us has to individually close this little poll, just for other speakers if it keeps popping up on your screens. But that actually ties to my second comment on the capacity squeeze. So we have this one identity squeeze, then we have this, I would call it capacity squeeze, because it's coupled with the capital constraints, and which, the lack of capital locks MFIs into this vicious cycle of small scale. So small scale means they cannot achieve the economies of scale that larger institutions, banks, fintechs used to make small transactions. And there is also, just this technology barrier. You don't have capital, so that that would enable to enlarge your transaction volume. So MFIs cannot absorb the high. So they cannot afford to the high, just investment, also the talent that is required to build and grow institutions. So that's the second constraint, and the third one is the competition squeeze. Just we work in markets where there are fintechs, where banks are downscaling, also through microfinance. Just we have instances where just banks acquire microfinance institutions, and
where are the opportunities for us?
Okay, and
could you see any?
Yeah, so each of these binds, those limitations has a bit of an opportunity. So one opportunity is to kind of decide which way to go. Do I want to go more towards the financial path, just maybe partner with a bank, kind of like Patria Credit with Patria Bank, and or what's the name of this other institution in Romania? Social.
BCR Social Finance.
Exactly, kind of like that would be one strategy that would allow you access to capital, to bank systems, while pursuing your social goals. Would you like to remind in the as work as a social enterprise kind of keep struggling with the funding, with the subsidy, but you will be very strong on the social focus. So your life would be justified, fully justified, but very much dependent on subsidy available. And the third one would be just to become a social enterprise with a sort of a twist, I would say. Just one of the things I noticed a while ago is that just MFIs focus kind of mimicking the financial sector only on individual needs. They tend to ignore, and that's also not general because there are exceptions from this rule, but they tend to ignore the community type of lens, community type of needs. I think maybe and this, I think, is a clear niche to become more kind of community driven rather than single needs driven, single customers needs, enterprises needs driven institutions, or combining both could bring actually additional. That will be working definitely in a huge niche, and also bring new opportunities, but also will allow these institutions to have even a stronger role in local socio-economic development. And that's something that maybe European Commission might like even more, just if there are areas that are neglected, just why don't we have MFIs that focus more on socio-economic development goals? So no silver bullet here, no magic solutions, but these are my sort of that's my thinking about the opportunities in the market.
Christina, do you have a magic solution? What are the risks and what are the opportunities? How could you comment the results? Because obviously also apart from the funding, like core microfinance institutions at the moment are a little bit scared that they would not understand where to go, as Grzegorz said, like identity squeeze. Should we become fintech? Should we become banks? Should we have a bank to survive? Or there is other approach? So what is your view?
I think connecting the two interventions before, Severin one with Jagish one, indeed from public funding from EU central budget, microfinance is, I liked it very much, is a budget efficient tool of delivering results. On the other hand, you see that microfinance is a relatively non-efficient business, that lenders or third-party investors, they want to see scaling up. They don't really like small or very small interventions. And I think this is the beauty of the microfinance market at the end of the day, where they are trying to match these two paradoxic ideas. We know today that microfinance segment, especially the small providers, cannot survive in the absence of a strong public financial instrument. Yeah. Because this public instrument is not only providing a guarantee or giving a loan or a subordinated loan to the MFI, gives a signal, gives a stamp. Other third-party investors will trust more, will believe more into an institution that benefits from such a public instrument, and will be ready to invest more money, to mobilize more money for that small social finance providers or microfinance provider to support vulnerable entrepreneurs. So I think now what to do and how to ensure continuous public support, we go back to what we were discussing earlier, show results. My colleague Simone Petrillo showed some very nice results of the implementation of the InvestEU microfinance and social entrepreneurship guarantee in an earlier session today. This is coming from the reporting we are asking from our intermediaries and they are sending to us. We know it's not an easy task. We know that. But in my view, it's probably the only thing that can further ensure public support, is the only thing that proves, if you want, the efficiency of the microfinance as an efficient budget tool, because it provides results. I think that's the if you want, the risk, the challenge, but also the opportunity for the sector.
Yes, and you said that actually the smaller MFIs could not survive without these instruments, like EU level instruments, but the truth is that also bigger players who are socially oriented could also not survive. Or not survive is not the word, but they will be not interested in serve vulnerable segments anymore if they don't have the guarantee, right? So
that's the idea. Sorry to interrupt. That's the idea.
Yes.
It's not about the financial institution survival. Because at the end of the day, if they will not have our guarantee, they will start lending collateral based lending to the entrepreneurs. The entrepreneurs, they do not have the available collateral to provide for getting a loan from such providers. So at the end of the day, instead of having financial inclusion or social inclusion, we will have, I think it's a too strong word, but we will have an exclusion process going on.
Yes,
so
for sure. Thank you, Christina.
Could I also add something?
Yes, sure.
I also think that we shouldn't be forgetting about kind of a smaller steps, and one of such steps I would see kind of getting our act together as the sector, and maybe trying to build, just we have those capital constraints. We cannot invest in technology, in using AI to help us with efficiency to reduce HR costs. But just if we could have if MFIs, EU MFIs could work together to develop this some sort of a shared digital back office platform, I think that that would be a way to kind of to work around some of those constraints. So I think we shouldn't be also forgetting, except for the big sort of existential steps that we should, identity and others, just we should also think about those smaller steps that could help us become a very kind of a modern type of players that use the latest technology, but care about the social mandate. And they stay, microfinance has been always on the forefront of the innovation, and we have this green transition coming. So there'll be a lot of the housing constraints, just there's a new housing policy, just so there'll be many new opportunities actually to work in this new capacity to help our clients transition into those new stages.
Yeah, absolutely.
Yeah.
Absolutely. So thank you, Grzegorz. We will continue this in 5 minutes, maybe, about talking about this. So Severin, please, to you as a policymaker, again, where do you see the biggest risks, but also what are the opportunities ahead of the sector?
So, I mean, I think there was some very good, Christina made this very, I think, interesting point about, of course, the different perspective that you take on the public policy side from, let's put it, the investor side. So looking at it from a public policy point of view, I think just to maybe develop a little bit more what also Christina mentioned, I think when we talk about making results visible, that means that that the sector needs to be in a position to show that not the number of micro credits that have been allocated, but rather to make visible that the sector works differently, right? You're not a standard financial institution. You have a bunch of services that are attached to it that come at the price of lower financial sustainability, but deliver the result of better social outcomes. Now, that however means, and this goes back to anything from the visibility to the storytelling to whatever you want to name it, in terms of just making it clearer to publicly, that you're able to report on these results. Right? This as a public authority is ultimately what I would be interested in. So, how many people did you indeed manage to protect from severe risk of poverty? How many young needs did you manage to actually integrate in the labor market? Therefore, what is it that I, as a public authority, therefore see as an outcome that I'm ready to subsidize? And again, I think we see that there are actors that are out there that are very much able to capture this, to report on this, and I think it's just about making this more systematically the case across the entire sector, because again, this is going to be your best advocacy when it comes to the public funding side of things. I think that said, when it comes to other challenges, I think I would maybe also avoid obviously being too stuck with the public subsidy side of things. I mean, I think it's also about developing other avenues. And I think I like what Grzegorz said also about the idea of being more community-based. So also to think about other fundraising mechanisms that allow also to deliver community services in return, maybe for community-based funding. To looking at social bonds as one way of also leveraging up, again, in return for outcomes. So I think, there's a bunch of other avenues, I think, that might be interesting. And where I just again want to draw the attention of the participants again to the advisory support that is out there that can really help you take, I hope, the decisions that put your business model then on a more sustainable footing and helps you address these identity issues, I think, that Grzegorz mentioned. very clearly out there.
Yeah, thank you. Yes, it's clear that we have a lot of opportunities. There are a lot of challenges, and what I see now is that part of the opportunities are overlapping with the challenges, which means we are now afraid that we are not going to have enough funding, but we have the opportunity to show our results and to get more funding, because at the end we are efficient too, and we are doing a great job. So this is true. And okay, we have like 9 minutes to go. So I really would like, we more or less are overlapping in what we are saying, which I think is good, because we have something like a direction, practitioners, funding partners, policymakers. But if you could share like one piece of advice with the audience now, just pick one very important thing, what would be? Starting with Christina first.
I don't know if it should be an advice. I mean, I think it's a consideration and basically capitalization of everything that has been said during this session and during the morning and during the year up to now, and I'm pretty sure it will be mentioned again in the couple of events that are following until end of December. I think all of us that we are involved directly or indirectly in the microfinance sector, in the social economy in general, we all should increase our visibility. We all should strengthen our combined voice, and we should make it louder. Social economy complements the traditional business models. They are not competing with each other. And sometimes the social economy offers innovative, sustainable, inclusive solutions to the current challenges. It's just we should make it known what we all are doing in this sector, and how our work, at the end of the day, it's our work, impacts on each and every person.
Fully agree.
Yes, and okay, Grzegorz, maybe you just.
But before I go ahead, I was thinking, because we still have a few minutes, because
Yes.
Martina, I think you manage a small MFI in Bulgaria, and I was thinking if you could maybe say where you see the challenges and opportunities from your perspective, that would be also very highlighting for us, just both.
I like this approach. You're taking my role.
A little bit, yeah,
Yes.
because I wouldn't want to miss the opportunity of hearing where you see the challenges. Just you are the actual practitioner.
Yeah. I started from the very beginning that we need to understand, like MFIs, that we are not babies anymore, and we could not wait somebody to take care of us. So we are adults, and we need to take the control and make extra efforts in order to show the results, as everybody said during this session. And this is something that I think that it's really, really important, and it could not be done without what you said, like the small steps towards technology advancement. And I don't think that technology is like a bad word. So we are microfinance institutions, we have human-based models, so we hate technologies. The two things could go together. I mean, you could preserve your human touch, but you need the technology in order to be efficient.
Sure.
And because we now have this impact measurement, not impact measurement, but we have this technical assistance in how to measure our impact. And there I could see that if you have proper technology, you could access automatically data that is available publicly. Now in EU is more easier than ever. So you could not have a person hired to do a research. Okay, how many people have you hired? What is your revenue 1 year after? You could take this information and do a proper impact measurement too. And this is really important to be attractive to policymakers.
Absolutely.
Yeah.
Absolutely, excellent. So basically, my piece of recommendation, again, as Christina said, not advice. Who am I to give advice? But a bit of a recommendation would actually tie to what you said and this identity sort of a crisis. So it's fine if you want to move the kind of a financial sector way, which will be representative of the global movement. So even if you want to become I don't know, just a social bank or a partner with a bank, become a fintech, all fine. But please decide and allocate your resources to go this way, or stay where you are, but become a high value, digitally enabled, as you said, but socially purposeful, social utility. And maybe consider that would be a twist, more focus on community that may bring you more opportunities and entirely new perspective on what you do.
Yes, the community-based model. That's
the community-based model where you accept community as one of your stakeholders. I don't know, by inviting them to the board, by working with them, by finding out what are the community needs in terms of enterprises and providing financing, but from the point of view of community. So not 10 garages or 10 caterers, but maybe the community needs to focus more on green transformation, and you allocate more of your resources to green transformation rather than financing all of those garages, which may be displacing each other over a certain period of time.
Yeah, and maybe in addition to this community approach, this partnership model to do ecosystem, because for MFIs it's really important to work together with NGOs that are dealing with specific vulnerable groups. And this is how you have real understanding of the needs, and you have partners that are doing part of your job. So this is also something from the community-led approach.
Absolutely.
Be part of an ecosystem, not standing alone MFI that is doing everything.
Absolutely. Yeah.
So to the policymaker, last words to Severin.
Thank you, Martina. No, very quickly, I think I just wanted to come back to what you said. I think the technological advances should make it easier for you to monitor your impact, should make it easier to report your results. We are also, I think, working at the European level through call for proposals to really create this sort of social finance market that I think will drive out on the marketplace actors that can support you in doing this, that will provide technological solutions in the next couple of years. So it's going to get better there. I think the second thing I think is it's going to get better also because I think you have a demographic tailwind behind you. You have, I think, increasingly both an entrepreneurial culture that should create a sort of a demand for your services over the next couple of years, as I think young people are much more risk prone than at least my generation. And you have a demographic tailwind because I think you also have investors who are increasingly interested in investing in socially aligned investment vehicles, so that are in line with their values. So I think that should also then help you to diversify, to attract sort of maybe more patient capital, more concessionary capital over the next couple of years, if you do it well. So I think maybe just to conclude in that sense, and coming back to your opening poll, I think it was great to see that the majority of the participants saw that the future will be, that they're optimistic. And just to say, I wanted to very much echo that. Please stay optimistic and positive, because I think you are doing a great job.
Thank you. Like the message is, the Commission needs our energy. and optimistic approach to do the job.
And pragmatic approach
yeah.
to do the job.
Yeah.
Efficient
Okay.
budget.
So I need to close this session. So everybody, please do the session evaluation at the end. So it's important for us. And I could see in the program that we have measuring impact session at 2:30 CET. So it's really very much relevant to what we have said, like how to measure impact. It's important to have the proper tools. So thank you for joining. Thank you to the panelists, and hope to see you soon. Yeah.